All right. Without further ado, so I'm gonna introduce Julia. Julia is a former coworker for mine, and we work on some projects back at HMH Baker. So I'm very excited to listen to this presentation. So Julia served as a HMH Integrated Business Planning IBP Leader since early this year. So she has an absolutely, very strong, robust career that goes through several businesses. So she used to be the senior manager, Customer Connect at HMH. She's been through all the different departments from engineering through all you can imagine, like field services, like all the above. So I'm very, very excited to have Julia here and present this PDM. So, but yeah, her experience include technical, commercial, analytic roles, and yeah. Without further ado, Julia, thank you very much for presenting today, and let's go ahead and kick it off.
Okay,
All yours.
absolutely.
Sharing,
Thank
you can
you.
have it.
All right, great. I'll go ahead and share my screen. Let's see here. Apologies, I'm definitely more of a Teams focus. Okay, so let me go ahead and put the presentation up and then we can all see. Are you all able to see my screen?
Yes.
Yeah. Okay, great. Thank you, Joanna, for the introduction. Yes, we used to work together, which was great. Just a little background on myself. Like Joanna said, I've been in kind of multiple roles across HMH. HMH is a drilling solutions provider, mostly focused in oil and gas, but we also focus in mining. So that's a little bit about HMH. And myself, I now am our integrated business planner for the company. But the company has been doing that for many, many years. HMH is sort of a new name for us. We used to be part of Baker Hughes, which used to be a part of GE, and the other half of our business used to be MH Worth. So for those in Houston, you may have heard those names before. HMH is our new name as of a few years ago. My background started in engineering. I did new product design and then moved into sort of product support for offshore issues. And that led me into sort of a customer support role. And I supported spare parts and the sale of spare parts for the company. And now I am here. So nice sort of background in a handful of our different business units, but there's many that I have not been a part of. And I think IBP is a very useful tool that allows all of those parts of the business to stay connected and keep everyone aligned. So without further ado, I'll jump into the presentation. So IBP is integrated business planning, and the whole idea behind this is it's a concept that was kind of created by a group called Oliver Wight. This was back in the 70s that this started. It really grew from an S&OP discussion where we started integrating supply and operations together, but then included over time more of a financial and strategic and scenario planning piece. And that's how they came up with the IBP in probably the last, I think it was 40 years or so. And so this has been used by many different businesses. HMH itself has been using it at least as part of the business for, I think, over 20 years. It is extremely critical to the way our business works, and we have a very robust plan in place, but that does not mean it isn't always changing. I am the IBP leader as of today, and I started at the early part of this year, but we had many leaders before me. And I think we're always evaluating ourselves to the IBP process itself and how it's trained and written in the book to how we implement that. And I think it's a very interesting tool because it can be used by a very straightforward business that might be fulfilling kind of stocked items. Let's say you're Coca-Cola and you are fulfilling all of the sales of your Coca-Cola products. You're not maybe making anything custom within an order. It's all something you have on the shelf that you can stock. It can be used for that, and that's maybe more straightforward, but we are more of an engineering to order business, and it can be used for that as well. So it has the capability to flex and be utilized in multiple ways. You just have to apply it for your scenario. So the way that the IBP is structured is it is led by your senior management. They are the ones who own this process And you'll see here on the slide, there are 5 meetings that happen on a monthly basis. So 1 week, we basically start on the first of the month. We have a meeting every single week. 1 week has 2 meetings, but one of them is kind of a smaller one. And that way we continue that rhythm every single month. And we look at this scope from an 8-quarter horizon. So you're always talking what's going to be happening in the next 2 years. How can we plan for that? And how can we all stay aligned? Each of the meetings is owned by someone from the business, and I can go into that in more detail in a later slide. But they will support the content of that meeting, as well as someone from their team sort of supporting the prep and presentation. But the tool itself allows you to connect all of these different pieces together so that you are not all speaking in a silo. So in our portfolio review, you will be talking about the company's portfolio, what products you're going to offer, what as a business you should be looking at compared to what the market states. Then in the commercial review, you would start to talk about the opportunities that you see within your customer base, maybe different options and opportunities that you have that are new within that month, or maybe things that have gone away that were removed from a previous month. In the fulfillment review, that's where you actually talk about how can you work to actually cover all the opportunities that you have identified in your plan. Do you have the right capacity within your teams? Do you have the right stock on the shelves? Do you have the capabilities on the manufacturing side, for instance? So a lot of different things can go into fulfillment. That's a big review. Then you would go into a reconciliation, which is more of a financial piece, talking about if your plan has changed, how then does that impact your financials within your plan for the year and the next coming year? And then you have a management business review. That's where you really have the CEO level group coming together and actually making decisions on some of the things that were presented during the month. So that's a very high level overview of how the IBP is structured. Like I noted, it's really a process that you can utilize to keep the team connected. It's supposed to be at sort of a mid-level of detail. You're not going to be talking about very individual tasks and things that are going on day to day, but you're maybe not setting the strategy for the whole business that might be getting structured within like a 10-year frame. So it's somewhere in between, more of a mid-level stage. IBP also, I would say, is a really great tool for making sure that we are highlighting risks, highlighting opportunities, and highlighting change. It's not a meeting where you're supposed to go in with your updates from the month. It's really to talk about those 3 key things, highlighting anything that's different. That way, everyone is working to the plan you've all talked about before and assumed as your plan. And then if there is a change to that, everyone is aware within the meetings. So a lot of different handover between them, and I'll get more into that in the next slides. So as I noted, it is more of a midterm planning focus. And to give you a better idea of where that structures itself with other different planning tools, you can see here I've circled it in the third column. So on a very detailed level of execution, this is something you're probably doing day to day. You're looking 1 week out, maybe within the month you're working in. This is somewhere where probably our lower level managers are working with their teams to actually execute. Again, they have a plan that's put in place, but they're utilizing tools like your PLM or an ERP system to just execute on what you've already structured as your plan. There may have to be changes day to day on those items, but it's more at a part number level or very specific equipment that you're working on in some specific order. Then you have your short-term planning. This is somewhere where I think there is sometimes a little confusion on between short-term planning versus midterm planning. There is a bit of overlap, but again, within IBP, you don't get into so many detailed discussions and you don't necessarily have to be super exact. And what I mean by that is you may be structuring what capacity do I need for my team? Like how many people do we need to cover what I foresee as the upcoming projects? And that is something you'd be looking at a very high level. Like we've got a team of 300 engineers. Maybe we break that down into types of engineer, but we're not going team by team to make sure every single person is allocated to every single project in a perfect manner. That might be something you're doing in short-term planning. So IBP is really a tool that you can use to talk about different scenarios that might be upcoming. You're really focusing more on the future, less about what's happening right now at this moment or looking in the past. It's really a forward-looking planning tool. And then, as I noted before, long-term planning is something that would be uh, more strategic than IBP, more talking about maybe M&A or other big changes that you would have as a company to your strategy, and more the vision that they would be structuring. Versus in IBP, I'd say we talk about it more with goals and objectives that usually are put out by the business at the beginning of the year. So just a little difference there on which type of planning this is.
Hey, Julia.
Oh, yes, go ahead.
Would you do me a favor? It's on, you're sharing your screen and it says the app Zoom. It's like a notification.
Oh, it's at the bottom. Yep, I can remove that.
Just so I can capture all the goodness on the slide. There
Absolutely.
we go. Perfect. Thank you.
No problem. Thank you. So I know in this group there might be those who are very familiar with the S&OP process. And so I thought it would be valuable for us to break down what the difference is between S&OP and IBP. Like I said, Oliver Wight, who created the IBP, was really originally structured on S&OP. And so they go into a lot of this within a more extensive training. I guess maybe I didn't state this. At least for me, I went to the Oliver Wight IBP training just this year. So it's very familiar in my brain. It was a 2-day course, and we really did go all day for 2 days. And I would still say there's more detail you can even get into in more specific classes of each of the meetings that are broken down in in IBP. And when it comes to their structure, they definitely talk a little bit at the beginning about the difference between IBP and S&OP, just because so many people are familiar with that process in comparison. So I noted on it a little earlier, it really does extend your scope from just being, do we have the supply to meet the demand, to then discussing it on a financial basis. How does that align with the company's financial goals for that year? We talk a lot about strategy. So sometimes that's talking about what our portfolio offering is going to be. Should we expand to new products? Should we remove products from our offering? Also talk about different scenario planning. So let's say we expect certain sales to possibly come in, then we could come up with some scenarios in which we could act on that quickly as needed. So a little bit more strategy focus there. The timeline horizon, I'm sure, fluctuates depending on the business, but S&OP tends to be a bit shorter. IBP is always a 2-month rolling look into the future. Financially, like I noted, it's really sometimes more of a separate step within S&OP and within IBP. Everything is tied into the finances. So our financial team is always present in the meeting. They're always tying in the plan to their plan so that we can make sure that those two are very well aligned. On the participation, I would say again, IBP really has to cover the entire business. There isn't anyone that's left out. We include, even on this list, we don't have listed, but we include IT. We have our sourcing team, like as noted, finance, commercial, your portfolio, and then obviously operations. Usually S&OP is much more focused on the operations team and supply chain. Within the meeting cadence, IBP is a very structured meeting setup where you have the 5 meetings every single month. So it does feel like you're meeting a lot, but not everyone goes to every single meeting. It does allow people to stay connected on a very consistent basis. And usually the meetings are about an hour. So that allows everyone to provide an update within that time frame. On decisions, yes, it's again more discussion around investments. We may sometimes make decisions based on different opportunities that come up if we want to put money into that. And again, that's more of the discussion, less than just working towards what's already in existence in our plans. And then scenario planning is, as noted, is something that we would bake into the plan as well. So a little bit of overview on the differences. All right, this slide is very busy, but it's a really key slide from the IBP training itself. And it goes through the detail of what each meeting is supposed to encompass and sort of how they connect to each other. So the first meeting in the month is going to be your product management review. We usually call it portfolio. And we would be talking about what in our portfolio is set up to provide us with a strategy alignment to what we want to do as a business. So we might be talking about different opportunities we have to expand into new markets. There might be discussion around market and risk to the market, depending on geopolitical things going on, or even just opportunities that our customers have. We also would be talking about what we want to be doing as a company and if we're aligned to that. And then I would say there's always a discussion around what our performance is when it comes to what did we decide to do on our portfolio? Has that converted into orders? Do we see customers reacting to it, et cetera? And then you're always going to see at the bottom of each of these talking about gaps, risks, opportunities. That's always a big focus of the meeting. And that one is going to be defined by someone who's either in charge of marketing or in charge of your R&D. Ours is called products and technology, and that would be the leader for that meeting. Then once you have that in place, there's a direct handover then to talking through the sales opportunities that you have in the demand review. So in that review, you are expecting to see all of the possible opportunities that are on the table. This doesn't mean we can necessarily provide or commit to all of those opportunities as a business with the resources we have, but it's the responsibility of the demand review team to share that with the group. And so they know these are all the opportunities we have. This is the forecast of what we really think is expected versus maybe lower probability. And that way everyone is aware of everything we could possibly be doing. This should be as free of bias as possible. And again, we're identifying any new opportunities every month, as well as risks to opportunities we may have shared previously. Once we have that defined, we then the next week talk about the supply. And this is where you're going to talk with the supply chain lead or the leader of operations. This is now where we decide, do we have the do we have the supply to be able to meet the demand? So do we have the resources in place, whether that is people who can go through and actually work all of the opportunities we have? Is it materials? Is it lead times on items that we have that might be longer than what a customer is looking for? Is it inventory space? It could be all of that. Anything that falls into the operations piece, that's where you would talk about it. So then we are aligning what we have seen in the demand review to what we can supply. And sometimes that means there are scenarios that we need to talk about, whether it's if we think this is going to come true, then we can do that by making this change. And so there might be asks that come up like adding headcount or buying inventory ahead of an order coming in just to be prepared for it, or lowering a lead time. Those are the types of discussions that we would then have in that meeting. Once you then get to the reconciliation review, you can kind of see that's listed as a smaller review. And that's usually a smaller group that gets together after the meeting just to summarize what we've learned in all three meetings. How does that align with the financial plans for the year and the upcoming year beyond that? And we have to make sure that with the different options that we're providing as part of the demand and supply, what do we want to probably recommend to our leadership to do with that information? And then in the management business review, that is the last meeting of the month. We just had ours today. But that meeting is where you talk with your CEO as well as all the other C-suite leaders to make a decision on some of the changes that you've been proposing. And then you just repeat that every single month. And that cycle continues on. And that's how you work an IBP process. This has a lot of content on it, but I think you can look back at this maybe and we'll take some questions at the end if you've got any. I've touched on this a bit, but this is just to show you who owns the process at each step. So for the first meeting of the month, you have portfolio review. For us, that would be our chief technology officer, but it could be the person who's in charge of R&D at your company. And then they also have a leader who supports them in prepping for the meeting, especially making the deck and kind of kicking the meeting off. And that tends to be someone like a program manager within their team. The demand review is usually owned by your chief marketing officer or your chief commercial officer. And then they may have someone on their team like a demand manager who would support them as their leader. Supply review is our chief operations officer or someone within that team. And then within the leads, it could be from many different departments. Obviously, we need input from probably many different places, but currently we actually have leads on all four of these different these different teams here that are shown, but they usually do recommend just having one single person as the main leader for consistency. The reconciliation review, as it is a very financial review, that should be led by your CFO. And then usually we have someone within our operations finance team support as a leader. And then the MBR, Management Business Review, that one is led by the CEO. And the IBP leader, which is myself, is the lead for that meeting and getting the content prepped. So as noted, all of these chairs are your C-suite. So this is really driven by your leadership. And I really can't emphasize that enough, because that is a really key, important step in getting everyone to utilize this process in a very beneficial way, is to have the buy-in from your C-suite. As much as possible, their participation and ability to make decisions is really the binding factor of this process. So I wanted to go through one example just to give you some idea of sort of how we would use this in a real life scenario. Starting off, let's say that this company has a set goal and objective for the year, that we want to expand a certain product offering into a new market that we have not sold to before. So this would come up starting in portfolio. Some of the existing product lines, the customer base, and your competition would all be evaluated and probably shared within that meeting within a summary of some sort, stating what type of product line this is, how we compare to our customers or our competition, and then which customers might be interested. We would then identify where we could possibly displace a competitor, or where there's an opening in the market that we could get into. And something here in this example would be that they noted ours must be cheaper than the current costs that we offer, because we cannot compete at the cost we're at. And also, there's a new model that we're going to need to make to be able to compete, that is something a customer is looking for. So those things would be identified within the portfolio, and a program would be identified for the team to start working on. Once that's done, that's when you get commercial involved. I would say they work quite a bit hand in hand. They don't necessarily have to come in this order, but the commercial team would be involved in that discussion with customers and identifying very unique, specific opportunities with the customers to sell our product. And we would be looking for some sort of commitment in some way, so that we can make sure within our forecast there's some sense of ownership, and making sure that that's really true and would come true. So they would put that opportunity as viable into your base case. That's how we discuss it, but we put that into our base case of our forecasted plan. Then they would identify to our team, hey, we need to compress this delivery because they have this specific timeline, and we also need to meet this certain price that was previously noted, and that would allow us to win this very specific order that we have with this opportunity. So they're giving us what is needed as part of the commercial, we call it commercial, but demand review. And that information is then kind of handed off to the fulfillment team to ask them, should we look at this based on the information we received last month from you all? The lead time is very long. Should we place an order for the materials ahead of time, just so that we could possibly win this order if it came through? Then the fulfillment team will go through, again, we call it fulfillment. It's really called supply. But the supply team would look at the opportunity. They would, again, look at the inventory that they have and the lead time on the materials that was identified as necessary for this new opportunity. And then they would decide what they want to do with that, or provide as an option. So in this example, we've noted that engineering is going to adjust their capacity so that they can build that design into their plan, and they can build out that model. Then the manufacturing team adjusts their capacity plan, and they've decided they're going to build that new model in the North America facility. They may be looking at materials that we might need for that and decide if we have anything in inventory. And then we also have our sourcing team that is also proposing to take action to evaluate vendors for that material that are needed, to find out if we have an option on cheaper availability as well as the time frame. So within that, then they are proposing, again, yes, they agree. I think we need to what we call risk release long lead items. So I've identified a couple items on that product that are the longest lead time, And that would allow us to reduce the risk if we got this order to a total of 12 weeks because we'd have that inventory on hand. So risk releasing is not necessarily an IBP process, but it's a way in which you can apply it. It's something HMH does. And it's, again, a way in which we can work to position ourselves to be ready if an opportunity comes through as an actual order. So anyway, that's what risk release means here. And then we come to MBR. This is where the executive team would evaluate that risk and decide, do we want to approve the pre-ordering of the material and utilizing of the engineering resources to execute on that opportunity? If they decide, yes, we are going to approve that, then we have a workflow that we put through and the risk release is approved. And then there's a kickoff to execute for that new plan. So this is one way in which you can apply IBP. This is how you can see there is a real true handoff from meeting to meeting, and you're making sure that all these teams are connected. No one should be getting surprised by too many big things every month. There might be new opportunities that come up, but you're not necessarily completely out of the loop when it comes to what's happening in each of these different organizations. And then the last thing I wanted to end on is lessons learned from our perspective on IBP. There are a lot of amazing benefits to using it that we found, but there are some key items that I think are really important if you're implementing IBP within your company. The first one is on connecting people. And I touched on this initially, but really getting your leadership involved and bought into the process is really the most critical piece of IBP. They teach this in the course as well, but getting people at the leadership level, but then also in the supporting roles who are able to provide input on the content that is going to be reviewed, that all really needs to happen in order to make the IBP process work. So I would say if you're starting an IBP and you want to kick something off like this, you would start by identifying who needs to be involved and who all would be able to support providing input for each of these meetings. The next item is on building the process. And there's obviously the structure of the meetings, but I think that there's a lot of different pieces to understanding what content is really critical to IBP and making sure that that content is easy to read, easy to process, and is somewhat consistent. I do find that there's honestly IBP, if you think about it, is really just a communication tool. And I think over communicating cannot be reiterated enough at any level of any business. Everyone always thinks everyone knows what's going on in their world, but usually they do not unless you tell them very directly, and you may need to tell them multiple times. So the IBP is a great way to create like templates, utilize something that's very consistent every month, and that way everyone knows how to read it. They have a good understanding of how it's going to be communicated, and it's very clear what handover is happening every month. Measuring performance is also very critical. I think it's extremely easy to provide updates and provide outlook on the future, but it is very important to take some time during the meeting to measure your performance. That might look like, did our forecast actually come true? Is our forecast accurate? And we don't have any bias in it from what we expected to happen. If not, how can we learn from that? That could look like your on-time delivery to your customers. Are we shipping things on time? As we noted, we had planned to, and we obviously have goals to be 100%. Did we meet that? And if we didn't, how can we identify a fix to it? So essentially, I would say on measuring the performance, it's really great to identify what KPIs the business wants to mark and note. And then it's very easy every month to have a sheet within every deck that states, okay, these are our KPIs. Here's where we fall within our performance of each of them. And if they are okay, it's great. You can just put like a green on that one and everyone knows, okay, it's green. We don't even need to talk about it. Everything's good. But if something is at risk or there's a really big issue, you could put a yellow or a red, sort of like a stoplight to be very clear. Again, focusing on communication and ease of reading it. That way, you know, okay, we need to talk about those KPIs and how can we resolve any issues going on there. Again, focusing on just talking about new risks, new opportunities, and any changes that happened between last month and this month. That is really the focus of the content. I find sometimes within a business, if stuff is going well, which is great, people do not want to come to the meeting with nothing to say. So they will come and they will just talk about what's been going on. And unfortunately, what happens if you do that is people lose interest. They don't find value in the meeting because they say, I don't really need to know about this. That doesn't impact me. It may feel important to the person presenting, and they may feel like this is their time to talk to the group. And it's not that what they have to say is not important, it's just not the purpose of IBP. So, really making sure you hone in your content on focusing on those changes to risks, opportunities, and your assumptions to whatever the plan is everyone's working to are really the keys to making a valuable meeting. And as I noted at the beginning, I think you always have to know that you have to evolve your process as you evolve as a business. I kind of noted this earlier, but HMH has not always been HMH. We've been many different versions of a company. We've acquired different companies. We've changed our strategy. And with all of that, you do have to evolve the IBP to meet what you are now trying to do. It helps, IBP can help with making some of those decisions, but it may be again at that higher level decision making that the company has made a change. And then you need to figure out how to incorporate that within IBP. And I would say you get new people involved. The way in which different people read different information may require you to change the way in which you're presenting that. And also, new tools may become available. Within the last couple of months, I would say we've made some huge changes because of AI. There's a lot of opportunity for us to utilize that as a new tool, especially with efficiency gains on prepping material. So we've definitely found some new ways in which we can present information that we find even more valuable. And that's because we're open to change every month. And that's part of what my role as the IBP leader is, to make sure we're always considering ways we can improve. So I know that was a lot of content, but I hope that that was helpful as an introduction to what IBP is and how it can be used. Very open to any questions now, too.
Okay, Bridget has her hand up. You guys can pop it in the chat. I'll watch it, or raise your hand, or just speak.
Okay.
Bridget?
Yes. And hopefully my internet doesn't drop out. It's been kind of going in and out. So just in case you don't hear me, that's what's happening. But I did have a question. You had highlighted in one slide the differences between IBP and SNOP. Do you still have an SNP process separate from IBP, or did you find that this was sufficient to maybe replace that process? I'm just curious.
Yeah, that's a great question. Yes, we do not have an SNOP process that is separate. Essentially, IBP kind of built on top of what SNOP had. So we're still showing the same type of capacity charts when it comes to, okay, this is all the work that's ongoing within the business. This is all of the resourcing that we need for that. So that piece of it is still very core to IBP. We've just kind of added on top some of the other pieces of information, talking especially on different opportunities that are upcoming.
Hi, I have a question.
Sure.
I'm heavily involved with the IBP process, so I fully understand where you're going with this. So my question, and it's something I deal with, will be, how easy is it for you to get alignment consistently on a monthly basis from your commercial partners? It's kind of what I struggle with the most, getting everyone into a room or on Zoom or whatever, Teams, whatever, right? And then getting into a situation to where now we can come to a consensus, getting that market data, because obviously this gives us an opportunity to be more proactive, but sometimes getting that market information from the commercial marketing team can be like pulling teeth, but you need to gain alignment. So how do you deal with that?
Yeah, great question. I would say that we don't have necessarily such a hard time getting the people in, but getting consistency, it feels like it changes a lot, which is something we kind of have to deal with. But I would say the things that allowed us to be most successful before we had everything really as a structured expectation was the fact that if the commercial team or the marketing team came to us with an opportunity they see, and they let us know about what that is, then we can plan for it. And I think they started to see that, okay, this new opportunity is here. They might be in a bad position with their current, available product offering, the lead time, the price, etc., where they could not compete. But they note, okay, this opportunity is out there. I talked to this customer. They're interested as long as we can do X, Y, and Z. And so when they present that to the whole group, it allows the team within operations to say, okay, I can look into this opportunity and try to get you a better price, a better lead time, et cetera. And I think the more that that happens, the more they see the value in presenting all of that information to the group. So having the support where they see something that they're getting out of it, and it's not just a requirement to report out, if that makes sense. We do also have a lot of ownership on the forecast within different regional teams. That's how we're based, at least in that group. And so each of our regional leads has to come and present their information. But it's something that's prepped along with their chief commercial officer ahead of time so that he knows what the plan is. And I would say we have a lot of tie-in between them and the finance group. So there's multiple people asking, I guess, for the information between finance and then operations needing support on what's going to come and how they can support the orders. I think as much as you can tie it into making them successful by them giving that information, that might help you to drive a little bit more consistency.
Yeah, it's I guess for us it's a little bit different too, where it seems like us as the supply planning group, it seems like we provide more of the data, and it's like, okay, here's what the data is showing, but it's not aligning to what's going on before. So we need to understand what's more insightful things, right? So that we can make the proper adjustments to the forecast, right? And so obviously it's a combination of commercial marketing but also leadership as well, to get their buy-in too on what the numbers are telling us versus what they're actually presented from a market perspective. But for the most part, it seems like, I am mostly running the PowerPoint in the Zoom in the Teams meetings in terms of gaining that alignment, right? So it's a little bit
If you
different.
can get somebody who can be the lead within that team, that might help drive some ownership. It's always hard. I think that, like I said, getting the people involved and consistent is tough. Something I was going to say that you noted, but maybe it'll come back to me. Anyway, hopefully that was helpful. But thanks for the question. Really appreciate it. Yeah.